Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Hye-mi, Professor of Economics at Hanyang University. Professor Yu, thank you for making time today.
Thank you.
So we have just wrapped up the first ever Korea-Mekong summit. What do you think the economic impact will be of this Mekong-Han River Declaration?
Currently, these 5 nations around Mekong River account for 20% of Korea's official development assistance. As a result of this cooperation plan between Korea and these 5 nations, we can expect a large economic benefit by extending the market for Korean enterprises. First of all, there is a growing demand for development projects around Mekong River. Korea's firms can participate in these development projects. Secondly, Korean pop culture earned increasing attention from these nations. As we strengthen the tie with these Mekong nations, we can increase the number of tourists visiting Korea from these countries and potentially create large demand for Korean goods, I think.
Certainly a lot of potential. In other news, we see the Chinese government, in response to U.S. demands, it said it's intensifying its protection of intellectual property rights. Stocks continue to see gains on optimism for a trade deal. But what's happening in the markets today?
Not only the Chinese government's announcement about this intellectual property rights, but also the progress in U.S.-China trade talks drove the global financial markets yesterday. This news also had a positive impact on Japanese and Korean stock market today. Nikkei index rose by 0.28% and Kospi increased by 0.31% today. However, Shanghai Composite Index and Hang Seng Index showed large volatility and dropped slightly despite the good news because China's industrial profits dropped steeply by 9.9%. There is a growing concern that the Chinese growth may slow down.
Yeah, and speaking of a slowdown, everybody's worried about a global economic slowdown, or at least they were in recent months. But at the same time, all the indices on Wall Street are at all-time highs. Chairman of the Fed, Jerome Powell, he has a positive outlook for the American economy. What's your view?
Yeah, well, it's true that there are positive signals about U.S. economy. And yeah, as you said, Fed Chair Jerome Powell gave an optimistic view about the U.S. economy. We also observed progress in U.S.-China trade talks. However, there are still lots of uncertainty around the U.S. economy. Most of all, there is a long way to go before the U.S.-China trade negotiations are completed. It's not just about trade, but about the tension between an emerging power and a leading established power. There is also uncertainty regarding upcoming elections in the United States. On top of that, various economic indicators show mixed results. Major retailers reported mixed results, and consumer confidence declined in November, so we cannot be 100% optimistic about U.S. economy.
Well, it was an impressive result yesterday for Alibaba with its IPO in Hong Kong, raising some $11 billion. The Hong Kong market, of course, has seen some major trouble this year. What's your outlook for Hong Kong?
Hong Kong stock market ultimately reflects Hong Kong economy. Because of the anti-government protests, there has been a significant drop in the number of tourists. The protest seems to last longer. Moreover, China's economic growth is slowing down, largely due to the U.S.-China trade dispute. The domestic political situation and the slowdown in China's economic growth will affect the Hong Kong economy badly. The Hong Kong stock market cannot go well alone.
Yeah, I think that's fair to say. But speaking of trouble, the People's Bank of China is warning of high financial risk because of external shocks. More than 13% of China's financial institutions, mostly small ones, have basically failed a test of financial stability. Why is China sending out a message like this?
The Central Bank of China reported that a lot of small and medium banks in China face a lot of risk. And they requested each bank to take various measures such as reducing bad loans, increasing capital, etc., to contain financial risks in China. I think China is realizing that they are facing difficulties in various dimensions, not only in the trade conflict with the United States, but also in industry and financial system as well. And China is taking these issues seriously, so they are making that report, I think.
Well, last question here. Anticipation building for South Korea and Japan to start a dialogue on their mutual export restrictions. But some say this could take years to resolve. What do you think?
Of course, it will take longer because we cannot approach the issue using the principles of economics only. It began with the ruling of the Supreme Court of South Korea in 2018, regarding compensation for forced laborers from Japanese companies. The trade conflict between Japan and Korea caused the IMF and quite a few global ratings agencies to lower their forecast for Korea's economic growth. I think the government definitely wishes to resolve this issue as soon as possible. However, ahead of the general election scheduled for next April in South Korea, the Moon administration would have very limited discretion about the situation. Any measures taken by the government may affect the voter sentiment in an unexpected way, so it will definitely take longer than we expect.
All right, Professor Yu, that's where we'll have to leave it for today. Thanks so much for coming on. We appreciate your insights.
Thank you.